Hey guys, so in today's video we are going to be going over 5 stocks to buy in October of 2017. And like the past few months, I'm going to be covering the brief reasons why you should buy the stock in this video, and then I will link more in-depth analysis videos in the description. So if you're new to my channel, I make videos on the stock market and investing, so if you're interested in that, consider subscribing, and let's get right into the video. So the first stock that I think is a good buy in October of 2017 is Delta Airlines. The symbol for them is DAL. And I like Delta Airlines because I think they have a strong brand as an airline. Whenever I think of flying, I think of Delta, and I use Delta personally. And the second reason is because I think they are the best airline. They are on time more than other airlines. They lose bags less than other airlines, as well as they have better profit margins than other airlines. So I think they're a bit safer financially than the other airlines. They have lower debt as well. And so they have pulled back recently because of what I believe is just short-term to medium-term traders taking profits because they've been up quite a bit. And that has put them at a 9.62 price to earnings versus the industry average for the airlines of around 12. So they are definitely trading at a discount to their industry. I also think that low oil prices are helping them. Low oil prices means that they are going to have lower fuel prices, and fuel is one of the most expensive things for airlines. And Delta also does have their own refinery, which they use to make their fuel prices even cheaper than they would be if they didn't have the refinery. And then finally, Delta recently raised their dividend by 50%, which has brought them to a 2.5% yield. And then Delta is also working on upgrading some of their older planes, which is going to be a bit of an upfront investment, but these new planes are 25% more fuel efficient. So if they can get through this initial investment, they will have some cost savings in the future. And Delta is definitely generating free cash flow far in excess of their needed capital expenditures. So I think that they're a very strong company, and I think they are definitely worth considering in October of 2017. So on to the second stock, which is ExxonMobil. The symbol for them is XOM. And I like ExxonMobil because they are an integrated oil company, which means they have the upstream segment, which drills the oil. They also have the refining segment, which refines the oil into gasoline and whatever else they make from the oil, as well as they have downstream, so the gas stations, and they have a chemical segment. So they really have the entire process, and that makes them a lot safer than just an upstream producer because they are not quite as reliant on just the price of oil. And I like Exxon in conjunction with Delta because Delta will theoretically go up if oil prices are low, and that will be make Exxon go down, and if oil prices go up, then that will help Exxon and hurt Delta. So there is a little bit of diversification from being reliant on oil prices if you own an airline and an oil producer. And so ExxonMobil is currently under $80 per share, and that means they're yielding around 4%, which is great. And this dividend is safe. They've raised their dividend every year for 34 years. ExxonMobil has a pretty low debt compared to many of the other large oil companies. I think they have a similar amount or less debt than Chevron, even though they are almost twice as big as Chevron, and so they have a very strong balance sheet, which means that they can weather lower for longer oil prices for quite some time. They also have quite a few new developments like gas stations in Mexico, as well as they have a Liza development, which they think is going to add around 130,000 barrels per day of oil that will generate 10% discounted cash flow at under $40 per barrel. So that's another great development. As well as they recently purchased another aromatics plant, so that will hopefully be beneficial for them as well. So all in all, I think that they are a great oil company. They are conservatively managed. They are definitely a pretty safe company. I think they're the safest of the oil stocks currently. So I like Exxon a lot, and that is why it is the second stock that I think is worth buying in October of 2017. So the third stock that I think is a good stock to buy in October of 2017 is Nike. The symbol for them is NKE, and I like Nike first off because they have an incredibly strong brand. They definitely have the strongest brand in the apparel industry. When I think of shoes, I think of Nike. I wear Nike shoes myself. They are also trading at a discount to their previous price to earnings. They are trading at a 21 price to earnings right now, which is slightly expensive, but I think that due to Nike's strong brand, as well as the strong growth that they have been showing, and the strong growth that I think they will continue to show. This premium price to earnings is definitely justified. And they went up about 10% a few months ago because they beat earnings expectations, but then they fell again recently because of Foot Locker and some other shoe companies. Like the people who sell the shoes, they have been struggling, and so I don't think that this is a problem for Nike, because people are still going to need their shoes whether they buy them on Amazon, directly from Nike, or at Foot Locker. So a decrease in Foot Locker sales might hurt Nike in the short term, but I don't think it will hurt Nike at all in the long term. I think that if Nike can get more direct-to-consumer sales themselves instead of using Foot Locker, that will also be beneficial to Nike, because those will be higher margin sales. And then China is also pushing athletics as a way to grow GDP, so I think that that will definitely help Nike grow in China, which is very important. Nike also has low debt, so I think that they are all in all a very solid growth company, and they're trading at a pretty attractive valuation right now. So then the fourth stock that I think is a buy in October of 2017 is Molson Coors Brewing Company. The symbol for them is TAP, and I like Molson Coors because they have very strong brands. They have quite a few great beers like Coors Light and Blue Moon, to name two of them. And they have a low payout ratio currently with a dividend of around 1.8%, but they aren't going to raise their dividend until they have paid down debt, which I think is a good decision. It will make them safer if they have less debt, and in the most recent quarter, they paid off $522 million in debt, so they're definitely showing that they are able to pay down the debt that they have. And they have great margins at 25% net margins, which is always nice to see. And they've also shown solid growth in recent quarters, and they're trading at a pretty attractive valuation right now with a forward price to earnings around 18. And then finally, it is a consumer staples company, which means it will be relatively resistant to a recession, which is good to see. We have been in a bull market for 8 years, so I think it is nice to increase your exposure slightly to consumer staples so that you have a bit of safety in those companies, and Molson Coors can do just that. So then the final stock that I think is worth considering in October of 2017 is Disney. The symbol for them is DIS. And I like Disney because they just announced recently that they are moving away from Netflix and they are creating their own streaming platform. So I think this is a great idea. I think they should have done this years ago, but better late than never. This will allow them to control everything. They'll have the content and the delivery system for the content. So that'll be great. I do think they have more than enough content to pull this off. So I think that's a good decision, but they're currently going to be in a bit of a transition period as they work on fixing ESPN and as they work on transitioning to their own streaming service. They also have a very solid movie lineup for the next few years, which is great to see. Their studio revenues were down slightly year over year last quarter, but they have some good new movies coming out in the next few years, which I think will definitely help their studio segment. They also have quite a few strong brands. If you look at their movie brands as well as the TV stations that they own, they have some of the strongest brands of any company out there. And then they also have shown great growth in their parks and resort segment. It was up 17% year over year. So that is great to see that they are growing there. And then they dropped recently a bit because their CEO said that earnings will be the same next year as they were last year. So that is a bit disappointing, but it makes sense. They're going through a transition right now, so growth might be a bit small for the next year or two, but I think they will return to growth after they have set up their own streaming segment, after they have some good new movies come out, and that their parks and resorts will continue to grow. They're currently trading at a 17.5 price to earnings, which is a pretty good deal for Disney. It's cheaper than the overall market. And I think that with Disney, they've shown solid growth over the last, I'd say 10 years or so, and they're definitely going through a transition period now, but I think they will return to growth after they have their own streaming segment, and after they can fix ESPN. So those were the 5 stocks that I am looking at for October of 2017. What stocks are you guys considering buying in October 2017? I would love to hear your comments down below. The links to all of the in-depth analysis videos will be in the description, so if you're interested in any of these stocks more, go down to the description and watch one of the more in-depth analysis videos. Thank you for watching. Please remember to like and subscribe.